first thing that we like to talk about when we go over why you should join NEXA Mortgage is the fact that we are a pure broker. And what does that mean, right? You're hearing a lot of this stuff, a lot of this chatter in the last year about the broker space growing, getting a lot more market share. And we want to be really transparent in what that means here. So any questions you have of what it's like to be broker versus banker, you'll let us know that here. But you're going to hear me talk about the differences. I'm going to be quite honest. There are some things about brokering that are difficult, right? That it's not always the best environment. We're going to be forthright and honest with you here so that you guys can make the right decision. So, but usually when we talk about the differences between banking and brokering, which really is NEXA compared to probably where you're at now, you're most likely here because you're at retail currently, or you're correspondent, or you're banker. Whatever you want to call it, we just call it banker. You might hear me say retail here and there. That's what we're talking about, right? Either you're a broker or you're not. You're a broker or you're not, right? But the first thing I like to talk about when I go into that is we talk about rates and products specifically, right? So top two reasons most people want to make a move at any given time is going to be either interest rates or compensation. So let's talk about interest rates for a minute. Now, I know a lot of you guys don't care about interest rates, and you're going to tell me that your clients are loyal to you and that it doesn't really matter. And I get it. I was the same exact way, but you will truly be amazed when you become a broker with the incredible rates that you have access to. You will, I just had same pop on my computer. Sorry guys, this just tells me why I'm having other problems. I'm not gonna be able to fix it right now. I'm connected on phone, so we'll just roll with it. But interest rates are more important than you think they are. But what I wanna do is I actually wanna show you interest rates. Now, if my computer lags on me, let me know. I just got some weird pop-up that told me I'm using too much resources, which tells me it's a computer issue. But so you guys should be familiar with Optimal Blue. We use a product of Optimal Blue called Loan Sifter in the wholesale world. And I'm just going to show you live interest rates right now. So now at the end of this call, guys, I'm going to do custom rates for you. So you can get your rates ready, right? Get your loan that you are currently pricing out for a consumer, get them ready, because, I'm going to go over those live with you. I just at the very end, we'll do that at the end. That way we can get through the majority of the information. But if you're going to ask me to quote you a live rate, I just ask you a couple of things. I'm going to want to know what your compensation is now, and I'm going to want to know what rate you're quoting now. And then I'll be able to show you exactly what your company is really making on that loan too. So, but for now, I'm going to quote a couple simple ones. My standard go-to is a 𝗵𝘂 type product. And I want to show you what our 𝗵𝘂 products are pricing out right now. So just scroll back up here for a minute. This is a $300,000 purchase, FHA loan. It's got a 680 credit score. I'm not trying to get crazy here. I'm quoting a 30-day lock, right? And this is a purchase transaction, of course. So if I'm going to quote this rate right now, what I'm going to show you here is right now, and you can see here my 30-day lock, I could lock that loan at 3.25%. And that is actually giving the customer a credit of $1,400. So there's not charging points to get 3.25. It's giving the customer a $1,400 credit. And that's giving the loan officer. Now that gives NEXA Mortgage a total margin of 2.75 is what that rate gives me right now. And that's going to give you, the loan officer, 220 basis points starting out. Now, once you hit 3 million in a calendar month, you're going to scale up. You're going to go to 250 basis points. And if you're one of these branches or teams that are hitting 5 million and more a month, you get the entire 275 after 5 million each month. So it doesn't retroact. It's just anything over the 5 million mark, but you get the whole thing. And people ask all the time, how is it that you can stay in business and how can you afford it? Don't you lose money when a loan officer is making over 5 million? The answer is yes, I do lose money. And that's okay because they paid it on the first 5 million. We're not designed here to send my kids to college. I'm not getting rich off you, right? You deserve to get rich off you. NEXA Mortgage is basically pools of loan officers coming together with all of our volume so that we can actually benefit as a whole. Now, a couple of things I want to show you though on this list, right? So PRMG is currently the one pricing at the top when it comes to Loan Sifter. You're going to see Finance of America. You're going to see United Wholesale Mortgage. We call them UWM. If you're not familiar with them, we'll talk a lot about them as we go. You're going to be familiar with these names though, 𝗟𝗪, right? I do want to point out though that this Loan Sifter account does not show special incentives that we get from some of these investors. In fact, we got a few different investors that are special to us. The one that we like to point out the most is my friends at UWM. Oh, they're all in here now all of a sudden. You guys surprised me. right? You're not seeing the pricing incentives here. And I'll just tell you right now, I don't want to put it out there to everything, but if you actually logged into UWM's website directly, they're going to be better price than PRMG. So there's going to be more than $1,400. And that's just because of the volumes that we do with UWM. And we're going to talk a lot more about those special lenders when we get to our support section. So, but any questions on this real quick as I run through this FHA scenario? I hope you guys can hear me okay. Somebody give me a holler real quick. You guys hear me okay?
Yeah, Mike, I hear you great.
I don't have my video.
I hear you as well.
Sound great.
Sound great. Yeah, you sound great.
Awesome. All right, so that's an example of rates. Now that's our maximum compensation. We'll talk about compensation as we go because there's other lenders that are much more aggressively priced. And this is, by the way, no means our lender list. We actually have a little over 60 investors that we're currently set up with. These are some of the folks that are actually in the Loan Sifter system. A lot of our lenders are not. Our QM products are not in here. You're not going to see jumbo price the best inside Loan Sifter. There's some specialty lenders for that stuff. But all your standard stuff. Just remember, at the very end, get all your scenarios ready. If you got a Govy or Fannie Freddie deal or USDA deal, I'll be able to price those out for you. Limited on the jumbo stuff. I get asked that question every week, but those ones we really have to log in directly to those sites. So let me just kind of continue on here. Let's talk secondly about products. So interest rates are one reason that you're going to want to join a mortgage broker, okay, or join NEXA. And by the way, it's also one of the reasons that you will double your volume. If you leave retail now, you will double your volume when you go into the broker community if you join a broker. There's three reasons you're going to double your volume. One of them, probably a very powerful one, is interest rates, right? Because more customers are going to say yes to you. And I get it. A lot of you think that rates don't matter, but they really, really do. Your clients are ghosting you. You just don't know it, because I assure you, I'm the best salesman in the world. And I found out that my clients were ghosting me. I was just so good at it, so good of a salesperson, and such a resource to my clients that they felt bad and they didn't want to tell me they weren't using me. So they ghosted me. And I realized that when we opened up NEXA and we went pure broker. But the second reason you're gonna double your pipeline is because of products, right? You're going to say yes to your clients a lot more often, is the reality. You're not gonna deal with overlays. Now, I really hate showing this slide because it's really outdated and it does not show a really good example of what we really do provide when it comes to products, okay? But here's a little snippets of what you guys are probably being held back at when it comes to retail, or if you're at a correspondent, something of that nature, right? One of the major ones, right, is sub 580 credit scores. We have the ability to go all the way down to a 500 credit score. But we're not talking about just one investor that does this, but we're talking about, we have multiple investors who do this. And we don't have to go get an exception to do this. We just do this, right? In fact, our favorite loan to do is a 510 VA client, because you're still going zero down payment all the way down to a 500 credit score on VA transactions. And in fact, I actually have an investor, one of the investors that are in our support center with us actually, that'll do that loan, manual underwrite, up to a 67% DTI. That's the kind of stuff that you get the creativity in the broker environment, right? We also do ITIN loans if you have clients that need the ITIN. We have investor stated income loans. People say the stated income loans are completely gone. They're not gone. They are still available on investment properties, right? Bank statement programs. Of course, we're talking about non-QM here. You have a full plethora of non-QM products that you have access to. Bank statement programs are real popular in that. In fact, we go all the way down to a 1-month bank statement program, right? If you had a foreclosure or a BK, we have those hardship programs, right? We have foreclosure bailouts. You can do 1 day out of BK, things of that nature. There's multiple different doctor programs to choose from as well, or executive programs, some call them. So you have those to choose from. You're not going to lose any of those. Let's talk about down payment assistance there for a minute, though, because down payment assistance, there's this notion that brokers lose the ability to do down payment assistance. And that's actually not true at all. What is really happening when a broker doesn't do down payment assistance, it becomes choice. You got to understand that because we have access to such better products and so limited overlays and such better interest rates, we're blessed with massive pipelines, right? We have a lot more clients that are choosing us, or we get to say yes to them. So we have the option to say no to some of the harder loans. Now, down payment assistance in the mortgage broker world is not any easier than it is in the retail world. I'll tell you that because I was a DPA-based LO back in 2013 and 14. I did a lot of this stuff. But we have access to national down payment assistance programs, specifically programs like the 𝗟𝗎𝗪 Front, right? We have a down payment assistance program that you can actually use on manufactured home. We can go down to a 580 credit score on this. True grant programs that are not silent seconds, things of that nature. There's multiple to choose from. In fact, there's actually more than 5. This is an old slide. There's more than that nowadays. So you have access to down payment. I do want to say this, though. This is where I mentioned that I would talk about the difference between banking and brokering, right? If you are a true down payment assistance loan officer and you rely on that product line, you might be better off in retail. Because if your retail lender is paying you higher margins, higher compensation on those, you might be better in retail. It probably, deserves to go into a further dive. However, if you are that loan officer, let me just tell you from experience, because I was that loan officer. So many clients, when you get the interest rates that we can quote compared to the down payment assistance rates that you quote now, when they see the difference on the broker rate, because we still have roughly the same rates that you quote on down payment assistance. We don't get a massive rate discount on that stuff. But when you realize the difference in payment on that, that customer will more often figure out a way to come up with that down payment when you get a broker rate sheet, is the reality. So keep that in mind. A lot of your customers will choose not to do down payment assistance because the payment variation is so big at that point. Let's talk about manufactured homes for just a quick second, right? Not many loan officers want to specialize in manufactured homes, but let's face it, it's nice to say yes to a referral partner who's trying to give you one, or a family member if they're doing one, whatever the case may be. As a broker, you become the catch-all. You can do all the products. You don't have to send these products out or say, I don't really specialize in that if you don't want to. We do single wides all the way down to 400 square feet. In fact, we actually do one-time construction on brand new manufactured homes, and some loan officers will use this as their builder account. They'll go to the manufactured home lots, right? And it's nice because you can wrap up the land, the house, right, everything in one purchase, and you close at the beginning of the transaction. You don't have to wait for it to be built, so you get paid early on. And those loan amounts, by the way, are not small. I know a lot of people think of manufactured home as smaller loan amounts, stuff like that, but they're not. They're actually good-sized loan amounts when you do the one-time construction, because the land and a brand new manufactured home is not necessarily cheap. So. Staying on the lines of one-time construction, we actually do one-time construction all the way up to super jumbo, right? So if you have a custom home builder, things of that nature, you can really take advantage of those relationships as a broker. You can take advantage of every relationship. And then let's talk a minute about nationwide high balance. Now, this is a product that we've been bragging about for a long time because our friends at UWM are who gave this product to us, right? Now, there are some others doing it right now, but I will tell you that nobody's doing it as good as UWM. But there are options. By the way, did you guys go down to 5% on high balance yet? Not yet. I can tell you, you can actually do this product down to 5% down. You can do this product with no MI. There are lenders who do that. But we've been doing this for a long time now because of our friends over at UWM. So, by the way, if you guys are wondering, UWM is here because we're doing our holiday party. They came into town with us. And so they're hanging out, checking things out. So we're having a good time with them. But this high balance is important because if you're not currently in a high balance market, I'm telling you right now, this product will crush your jumbo offering. Now, we just announced higher conventional limits, right? What's it go up to now?
6,100.
Huh?
7,100 is the high balance.
So about 760,000, right? So you can do nationwide high balance up to that. And you don't have to deal with jumbo guidelines. You don't have to deal with jumbo rates, right? You can do this with no MI. So it's a really, really powerful program. And it really crushes your competition in the markets that you do that have high balance options. And so some of your California markets, Colorado, Washington, back east, right? You already have high balance in your market. And this isn't a big deal. But if you don't have high balance in your market currently, this is a really powerful product. We see here in the Maricopa County market, we went out on this product multiple times a month. And you're not talking about the small loan amounts here, right? You're not talking about trying to win out $150,000 loans. You're talking about getting $600,000 loans. It's really nice to be one of the most competitive there is in that market. So But beyond that, right, hard money, fix and flip loans, if you're not taking advantage of those types of products now, you have the opportunity to say yes to that stuff constantly. Commercial products, right? If you want to take advantage of commercial financing. Commercial is interesting because you can do it one of a few ways, right? You can just refer it over to a commercial lender and they'll take care of the whole thing. Name number on a cocktail napkin, right? They'll take care of the whole thing and you'll get a point for that. You could do part of the work, right, and earn a little bit more, or you can just do the whole thing and really swing from the fences and make massive money on commercial transactions. There's a lot of money to be made on commercial though. Reverse mortgages is another massive opportunity in the brokering. You have multiple investors who do reverse mortgages, and if you're not doing them, learn from some of our loan officers. I've seen the commission checks on these bad boys. They are 5-digit commission checks consistently and north of $20,000 very often. I've even seen them north of $30,000 just on one loan. Huge opportunity in the reverse mortgage arena, and we have the investors to be set up to doing it and keeping you ultra competitive on it. So, and then lastly, at least that's last on this list is HELOCs, right? Now, nobody wants to go out and be a HELOC specialist. The point is that you can do them. Now, 2020 is anticipated to be the year of a lot more HELOCs, right? A lot more advantages in the HELOC arena, and you have the ability to take advantage. These are not huge money makers, right? So we're not trying to swing from the fences on them, but it surely is nice to be able to make something on them and to let your partners know that you're the catch-all, so they're not sending that client up the road. Or if you're doing an 80-10-10 loan, right? You can make money on that second as well. You don't have to send it up the road somewhere where somebody's doing the loan. And then of course, now you have the fear of your client being in that database to refinance them or do their next transaction. So it's nice to keep those in-house. But any questions on products at all? Any rumors that you guys heard about products that I might be able to answer for you? I've seen a lot of stuff going through the chat line there. I hope you guys are getting to those okay. So.
Could you review some of that hard money? Is it 100%? If they own the property, 75% LTV. What's the LTV? Could you review that hard money fix and flip? That's pretty high.
Okay, so there's multiple different investors for hard money, right? So it depends on the investor itself. I'm not a hard money specialist, so forgive me. I could probably get one of the guys in LO support to join this call by the end and answer that question in much more detail for you. But hard money ranges anywhere from a really sexy rate at 60 LTV. You can do hard money up to, I want to say it's 90, is it 95%? I think it's a weird number, it's like 93% LTV, including the repairs necessary if you're a seasoned investor, right? So you can go high, it just depends on the investor. This is the thing though, we have access to all the different hard money investors, right? So you have multiple of them to choose from. So hard money investors are actually really easy to work with too. So it's kind of a whole different world, if you will. So
Hey, Mike,
I didn't answer your question to, yeah.
Go ahead.
Go ahead.
What's the minimum loan amount on the hard monies? I know they can be difficult. I'm in Michigan, the reason why I'm asking.
Yeah, it depends on the investor, right?
Okay, gotcha.
Minimum loan amount I usually see on hard money is they go lower. I mean, they'll play in the 75,000 ranges generally. A lot of them want at least 100,000. Some of them are going to limit you to 200,000. You know, they want bigger loan amounts, but they all charge fees if you go really low, of course. So.
Yeah, thank you.
So, but you have access to all. So you'll have multiple to choose from. Look, if you guys really want to have some fun and figure out what kind of products that you can do as a broker, go to scotsmanguide.com. At scotsmanguide.com, they got lender matrices, right, for residential or commercial. Just go in there and spend an hour or two and have fun and use the matrix and write up funky scenarios. You're going to see a lot of things in there. And the answer is, can I do that as a broker? The answer is yes, you can do that as a broker. One thing that's great about NEXA Mortgage is that we are now at such a size that every investor is begging to set up with us. They know what the opportunity to be set up with NEXA Mortgage is because of how big we've gotten, right? We're the second largest broker in the country when it comes to LO count. And they know what that means. We're doubling in size every 135 days right now. Because of our growth. And so it's nice because when you're a mom and pop broker shop and you only got 2 people, it's harder to set up with all these investors. They don't want to waste their time with you because they don't think you have the volume to send them. But NEXA does, right? So they will be able to set up with any investor you want. So, and we wait on you guys to tell us who you need. We don't go and do it ahead of time, but it takes like 24 hours to set up with a hard money investor, as an example. It takes about 48 hours with a non-QM investor. Sometimes it only takes, 48 hours with a regular investor, Fannie, Freddie, Gubbies, that kind of stuff. Sometimes it takes longer, but you can start working with them right away regardless. So.
Very good.
But any questions on interest rates or products, anything at all?
Yeah, Mike.
Do you have a 100% loan to value doctor program, doctor loan? No doubt.
So I'm pretty sure we're not able to compete with the 𝗵𝘃𝘀𝗧 program that's out there 100%. I believe ours is a 95% program. So I don't think there's a 100% doctor program. Check Scotsman Guide though. Scotsman Guide will actually run that matrix for you, and it could be the case. So.
And you got a question here that somebody missed info on commercial. Can you quickly?
Yeah, I mean, commercials, one of those things. Again, I recommend Scotsman Guide. Go to the commercial section for that one, though. You can do commercial one of three ways. Like me, I'm not a commercial loan officer, right? If I was to get involved with a commercial transaction, I would probably be getting in the way more than anything. So what I do is I'm going to refer it to the commercial investor, and like a name and number, and then I'm just going to get a point for that, right? So if I refer them over a $2 million deal, I got a $20,000 check coming in. But some folks are a little bit more seasoned than them, and they'll do the whole thing. And you're talking substantial funds at that point. Usually it's 3, 4 points, that kind of stuff. You guys can charge, it doesn't follow the QM rule, so you can charge a lot more on investment property. So. But you can do commercial is really the point of the whole thing. So hopefully that answered your question. Was there any more questions on rates or products?
Could you rate your go over your comp plan a little bit? I've kind of missed it a little bit.
Oh, we actually didn't get to that, but let's go over that next.
Good.
How about that?
Okay, good.
Right. Like I said, the top two reasons that somebody decides to leave one mortgage company and go to another is either interest rates or compensation. Now, at this stage of the game, we covered two of our non-negotiables, right? And that's rates and products. And when we say non-negotiables, we will not be beat on these things, right? You're not going to be beat. If you become a broker, you're not going to be beat on rate. You're also never going to be beat on product. Compensation, though, is another one of these things that is a non-negotiable to us. Now, what you see in front of you is a chart, right? This is a reflection of our compensation plan. So now you will choose a comp that you want to, it's a pick a comp option, right? And so on the left column, if you choose to work with investors at 275, then you get paid the compensation to the right. The vast majority of our loan officers are trying to swing at that 275 fence. Specifically because most of our loan officers come from retail and you're used to charging really high interest rates already. You're always going to be blown away when you see the interest rates that we have here. So most loan officers start at that 270, but some loan officers get a little bit more competitive and they go into the 200 ranges. And then others, like consumer direct type loan officers doing a lot of direct mail, tremendous amount of, they'll fly right down to the 125. It's your choice where you want to be. But the vast majority of our loan officers go at that 275 range. So we'll spend most of our time there. But if you're at 270, if the company is receiving 275 basis points, right, and then your funding for that calendar month less than $3 million, you're going to get 220 basis points for all of those loans. Now, if during that calendar month you get over $3 million, we're actually going to give you 250 basis points for everything over $3 million. Okay, and then if you get to $5 million, we're going to give you 275 basis points for everything over the $5 million. It's not retroactive, but everything over that $5 million. And the $5 million is really branches, teams, really high producers obviously are hitting those high levels. So, and they deserve it, right? They deserve to get it. And people, do the math here, guys. If I'm receiving 275, but I'm giving you 275, how am I making any money, right? How is the company making money? And the answer is we're not. And that's okay, guys. We're okay with it because we believe as this company was set up for loan officers, okay? I didn't open up this company to say that I'm going to turn into a banker and get filthy rich and retire with generational wealth for 5 more generations of my family, which is what bankers generally do at that stage. I did this so that we can create the absolute best platform in the country for loan officers, and that is what we've done. And over $5 million, you deserve to get the whole thing because you've already paid in at that stage. NEXA is designed to live off of 25 basis points, right? And that pays for all of our support, all of our licensings, our audits, our compliance, payrolls, everything that we have to do to get involved, right? So, and you shouldn't have to pay more than $275, or you should get the whole thing after those levels, and that's what we're designed around. So it is important to note, though, you know, obviously you did the math there. 275 minus 275 is 0 to NEXA after 5 million, but so these do work out as P&L plans. What we've done is we've taken branch manager or area manager compensation plans and just given them to everybody. Okay, so you as a loan officer, maybe you're already a team leader or maybe you're already a branch. That's okay. Everybody does get the same exact contract here. So if you're a branch manager, you've already got it. But if you're a loan officer who's inspiring to be a branch manager, you can choose to either just keep all the money to yourself, or you can choose to grow your branch, or become a team, or whatever the case may be. It becomes your option. We really keep that entrepreneurial spirit into your hands, and we give you the options to do so. But you can see, by the way, one thing I want to point out is borrower paid compensation. Borrower paid compensation is where a loan officer will never, ever, and when we get back into the rate sheets, by the way, I will show you the borrower paid compensation. I should have showed it to you a minute ago. And you're going to be blown away by the rates that you see when you go borrower paid. The difference being is you have to charge the borrower points at that level, but you're talking like a 2.75 rate. So, but if you get paid, the borrower paid would slide up and down the scale like you're seeing here on the left side. Okay, so if you only charge a borrower 2 points, then you're only receiving 154 basis points starting out, which is still probably more than most of you are getting as an LL. But over 3 million, you're getting 175, and over 5 million. But what this really is, this is the way that as a broker, you will never, ever be beaten when it comes to interest rate. You will always be the lowest rate in your market. It's just whether or not you want to go that low at that stage. Okay, you can get the rate to the bottom and be careful. You can't do it. I've seen loan officers give loans away completely. So you don't want to do that, you know, but it becomes your choice. You don't ever have to lose a deal. But if you have that really, really strong realtor relationship and you just want to make sure that this client or they send you their brother or sister and they're just shopping your heart, you want to make sure they take care of you. You can absolutely make sure you win any deal that you want. You really can. So you don't ever have to lose a deal to rate. You'll never lose a deal to rate again when you become a broker. So just be careful not to get in the rates to the bottom. So any questions on this chart though? So I do want to remind you though that this is a true P&L model, right? And what does that mean? If you've ran a P&L, you already know what that means. You expect all this stuff. And if you've never ran a P&L, it is very important that you understand what a P&L really does. And what a P&L does is it puts all the expenses back onto you. So expenses do find their way to your ledger, your P&L. We run a ledger and a P&L on everybody. Our accounting teams are run ragged. We appreciate them, but it takes a lot. But you get a P&L. Now you can use those P&Ls to grow. You can use them to your advantage. But it's important to remember that out of this compensation, your expenses do come out of it. All expenses as a result of your employment here will come back to this P&L. Let's talk about what some of those examples might be though. Credit reports, right? If you charge tri-emerges on every single customer, you might want to consider pulling a single bureau first because you will get charged for credit reports on the files that do not close. If the file does close though, you charge a credit report to the consumer at the end and your P&L gets credit for that credit report. So you get that money back at that point. You can mitigate your exposure to credit reports by doing single bureaus or soft pulls, which we have access to it. And then of course you get the money from the consumer if the loan closes. Marketing expenses, if you decide to get an office space, there's benefit to getting an office space, by the way, but if you get an office space, it does go to your P&L. We give everybody the massive margins though, so that you can take care of those expenses is why we do that. But anything, the one that catches a lot of people off guard though, that we want to point out is the employer matching portions, the employer matching taxes, right? State, federal, FICA, workers' compensation, state charges that normally your employer currently pays for. Those do find their way to your P&L as well. So you will get those charges. When it's all said and done though, right? If you're at 220 basis points and you're closing less than 3 million a month, remember, by the way, if you're closing 2 million a month now, you're going to be closing 4 million a month soon. But all said and done, you're going to be looking between 180 and 190, depending on the state that you live in. Some states have higher state requirements. Some states have higher unemployment, things like that. So you will be looking at about 180 to 190 when it's all said and done, depending on how you do your marketing expenses. Now, that all being said, it's going to be real important to point out another thing that we do here, right? There's not a slide on this, but we give every single loan officer within the organization an American Express card. We give you our credit card so that you can write off all of your legitimate business expenses on our tax returns. We want to give you every exposure to being self-employed, right? To being that entrepreneurial spirit. That's why we give you massive margins, but we also give you a P&L so you understand the responsibility. But we also give you the credit card so that you can take advantage of the tax deductions like I can as an owner of NEXA Mortgage. So we give that to you. And it's a pretty substantial discount. The vast majority of our loan officers are at a 37% tax bracket. And so when they're able to put all their legitimate expenses onto our tax returns, that 37% becomes substantial. We have one branch doing about $25,000 or $30,000 a month just off one charge, just off their marketing charge for their direct mail a month. I mean, figure that out if they had to pay for that themselves and the tax benefit that we give them, right? That's a substantial increase. So if you converted that into the form of BIPs, right, on compensation, obviously that would take your BIPs even higher, is the reality. So that credit card is really, really important to take into consideration. We give that to every single employee so that you don't get hit with those taxes. I don't think it's fair. I thought it was crap when they rolled out the new tax code where you couldn't write off expenses as a W-2 employee anymore. It really did the loan officers over, unfortunately. So hopefully they make some corrections to those laws, but those rules. But as of right now, you don't get to write that stuff off. You guys all probably learned it the hard way this last year's tax returns, but we've been doing this for a little over almost a year now because we believe in the loan officers should be able to not have to sit there and take those hits. So any questions on that though? The compensation, the P&L, or the Amex card on how that works? Usually I get questions on compensation.
Yeah.
It's usually pretty important to you.
How does the Amex card work?
So real simple. Anybody who wants one can have an Amex card, right? So you'll get an Amex card sent to you. There is a reserve on it. Keep that in mind. So if you want a $1,000 limit, we'll hold a reserve on your P&L for $1,000. That's all it is. But now you can charge $1,000 over and over again, right? So that's all it really comes down to. If you need to raise that up, you just tell us to raise it up, and we raise it up. So there's an agreement to it that you'll sign that makes you understand. You can only put legitimate business expenses on it because it has to be a 100% tax deductible item for us. But we've had a few bad apples, but nothing too egregious. So. But everybody gets one, so you'll have a NEXA Mortgage Amex card. Well, if you want one, not everybody wants one.
Now I've got a question.
Does that answer it though? Yeah.
Who gets the points for the card on the NEXA Mortgage, from NEXA Mortgage?
Say that one. Oh, the company gets the points. We're using those points for things like we're getting ready to announce President's Club trips, things like that. So.
Oh, okay. Cool.
That's awesome. That's awesome.
So I guess technically the top producers will get those points, right? Anything else though on that?
When do you get paid when you close a loan? A month, 2 months? How does that work?
Well, let's skip over to this paydays everyday column over here. Right? That's a good question. I'm glad you brought it up. Every day is payday here at NEXA Mortgage. We do not have payroll cutoff cycles, right? You fund your loan on the 15th, you get paid on the 30th. That doesn't happen here. We run payroll every single day. Now, there are two rules to it, okay? A, your file does, all your paperwork has to be in the compliance side of things. But when we get into processing, you're gonna realize that your processor handles all that. And two, the money actually has to be here. This isn't banking, right? Where we fund the loan off our warehouse line and we kind of already have our money. This is brokering. We do need to check from the title company. But as long as the money's here, and they can do an ACH transfer to our bank account too, and the paperwork is in, then you get paid right away. Now, if you fund your loan with UWM, and you use a processor that is known to be very, very easy to work with us, we'll actually bypass the compliance piece, because we already know that UWM is the most compliant lender that we have, and their paperwork is easy for us to get to, and the processor is cooperative. You actually bypass that, you just go straight into the payroll process. So it's actually really fast. And about, help me out here, 60% of our pipeline, 70% of our pipeline is going through UWM these days. So there's about 60%, I think, is going through UWM. So there's a tremendous amount of our pipelines going through UWM. You guys, you'll realize when you get into this world, and we'll talk about that more here in a minute, why it is you want to use specific investors. So, but payroll is every day. Now, I will tell you that payroll is running about 48 hours behind right now. So if your file was cleared for payroll on Monday, you would have probably saw that actually get issued on Wednesday. But we are the fastest. Their goal is to be paying every single day. So we're hiring more people into our accounting teams right now to make sure we get that back to right away. So, but it's fastest in a business nonetheless. All right, let me back up one slide there. Let me talk about a piece of compensation, and this is important. Nobody's doing this, right? NEXA is the only one doing this. It's revenue share, right? So revenue share is a reflection of you helping NEXA grow. One of the reasons that NEXA is growing so fast, we're the fastest growing broker in the country, is because of our loan officers, because I have 344 loan officers that are also recruiters, right? So you guys actually get paid. What we've done is we've stripped out middle management. We've stripped out area managers, regional managers, district managers, and all the margins that they come with, because they're the ones who are responsible for growing the company. So initially in our first year, I was the one responsible for growing the company personally. I did all the recruiting. But then we figured out, you know what, why don't we give the loan officers some of our money to help us get even bigger? And when we first rolled this out, it actually lost us money. It really did. But we got this such massive volume so quickly because of the help of our loan officers that it's something we rolled out company-wide after that. And now we give it to everybody. Now, this is optional. You do not have to participate in revenue share if you don't want to. But if you do, NEXA is going to give you our money for helping us out with that. And so let's look at it. You can see on your screen here that there's 3 levels to it, right? So if you're a loan officer and you join NEXA Mortgage, usually you're here for a couple of months and then you realize this doesn't sound too good to be true, right? You're like, these guys are for real. They really live up to what they say they're doing. And so then you start telling other loan officers about us. Maybe you tell one loan officer about us. And that loan officer, you don't have to do anything, by the way. You don't have to mentor them, manage them, nothing. You don't have to help them on board. You just tell them to join this call. That's all you do. Is you have them join the Why NEXA call every Thursday. And if they join NEXA, they're in your downline, and you get up to 10 basis points on every single one of their loans, right? And if they have another loan officer that joins, that would be your level 2. You get up to 10 basis points on those ones as well as the third level. You're not even going to know who the tier 2 or the tier, especially the tier 3 people. You're not going to know who they are, right? But you get paid on them, and so does the next loan officer. They get paid on them as well, right? So everybody's incentivized to help the organization grow. Of course, people join, they don't join NEXA for the revenue share. They join it because of our normal compensation. They join because of our service, because of our support, because of our rates, because of our products. But they certainly enjoy the revenue share once they get here, right? Now, there's 2 components to revenue share that we are very excited about. This money never ends, by the way. This is again, we go back to, we want you to have your piece of NEXA. In fact, we're changing the name of this program probably to NEXA Share. So you get your share of the NEXA organization. Because if you retire, this money continues on. Now, we have loan officers that are making substantial 6-figure incomes off this, and we barely introduced this about 1 year ago to a select few. And then we really rolled it out to the masses in January. And it really did cause us to grow at a huge rate. But we have loan officers that starting January 1, they've already got guaranteed residual 6-figure incomes without even closing a loan, right? It's residual income. It comes to you every single month. Now add that to the top of your compensation that I already showed you. Add that to the top of your BIPs, right? We have loan officers here that are closing 1 or 2 loans a month, making $15,000 plus a month, right? And not even closing a loan sometimes, right? Or if you close 1 loan but you make $25,000, figure out the bits on that. It's well over the 300 bits legally required, but you get it because of the revenue share, right? It's a substantial income to a lot of folks. But this money serves as a retirement. So when you retire and you're done with the mortgage business, you get to keep this money. This money goes to you forever at that stage, right? And if you were to die and pass away, you kick the bucket, your beneficiary gets this money. It continues on. You've earned it. It's yours. You get the right to it long term. It's really important to us that you guys have your stake in this. So any questions on that revenue share, how that works? Usually there's a lot more questions on that piece.
Mike?
So my next tips, you guys, go ahead. Okay, good question. So we do allow recruiters to do it, right? There are recruiting companies out there that do this, and there are people that want to just recruit. As long as you are not licensed, right, you could actually do this. You could do it as your own company. You're an independent contractor at that stage. That's a 1099 situation. You're not doing license activity, of course. You can't do it, and you can't pick up your license. We won't let somebody have their license at another company and participate in our revenue share. You can't do that. But if you truly don't have a license and you just want to recruit, then you can do that, right? We have a separate contract for that. And it falls into the same category. Same exact stuff, though. It just goes to your company now instead. So.
Now, is the revenue share different than the 10 basis points up at the top?
Say that again. I didn't hear the first part.
Is the revenue share different than the 10 basis points that you get at the top?
Okay, so the 10 bips, it's up to 10 bips. Okay, so as long as the loan officer is hitting the max compensation, like I mentioned earlier, that 220 bip level, as long as the loan officer is using those investors, it's 10 bips. There is a formula to it there that you can see in the middle of your screen, right? It's whatever our compensation is. NEXA Mortgage gets the first 25 bips so that we can survive, and then you get 4% of whatever's remaining. And if you figure it out at one of our max investors, about 4% of whatever's remaining is 10 basis points. So that's why you got the asterisk there. There's a formula to it. But if they only charge 2 points, right, and they go borrower paid as an example, it's going to be somewhere in the range of about 7, 7.5, or 8 bips instead. So there is a formula to it.
If you are unlicensed, unlicensed, truly unlicensed, does the compensation pay out the same?
Well, if you're unlicensed, you can't get compensation. You can only get revenue share.
That's
you can't get paid on loans.
Revenue. So what's
the revenue? The revenue share is the same. Yes, sir. Revenue share is the same whether you're a loan officer at NEXA Mortgage or you're just recruiting as a company for us. We have a lot of recruiting companies now that have their own recruiting contracts. We won't sign their contract, but they're happy to sign ours. So, because it goes much deeper than what theirs talks about anyway. So,
what's the process behind getting set up to do that?
Oh, it's like a 24-hour process. I mean, it's just a matter of you get a revenue share contract, we all sign it, and you're good to go. You're in. It's really fast. So, we actually have new multi-level. I hate the term multi-level marketing. I never intended to have multi-level marketing be labeled to NEXA, but it is what it is. But we have a new software program that will actually lay the stuff out to you. It should be rolled out within 2 weeks, if not sooner. So, and I'm excited about it because then during this demo, we'll log in and I'll show you what some of these loan officers are making. But even as a recruiter, you'll get a login to that and you'll be able to see your downline. So, how much you're making, how much they closed as the month rolls on. Our accounting teams will be updating it as loans close too. So we're really excited about that. It's rolling out within a couple weeks.
Let me ask the crazy question.
Anything else? Yeah.
Crazy question. I got some loan officers, say 4 or 5 loan officers. I personally recruited, brought them in the office. Do we get revenue share off of them as well?
Absolutely.
All right. And how long does it take to come on a board? I'm licensed in Michigan. How long does it take? I'm currently doing a net branch here in Michigan.
So if you're in Michigan, are you close to Pontiac?
I'm Oakland County, baby, right down the street. I'm in Wall Lake, Michigan, right down the street.
All right. Well, I'm going to be there. I'm going to be there on the 16th and 17th. Is that the dates I'm coming? I think I land on the 16th, but I'm going to probably stay an extra couple of days because I got to meet some other folks there too. But anyway, you got to come out and see me. I'm going to be at UWM's office out there. So
sweet. Make sure I get an address.
In fact, we'll get it to you. In fact, for everybody that's listening, one of the very first things that's going to happen when you join NEXA Mortgage is we're going to schedule your trip out to Michigan to go see the folks up at UWM. They're going to fly you out. They're going to put you up in a room. They're going to feed you. They're going to take great care of you. They're great partners of ours. Everybody gets the opportunity to go up there so you can see what they're really about, and you really want to see how it works, see how they put this whole thing together, because they're going to be one of your top investors that you do. So I'm not just saying that because they're here.
Awesome.
Yeah, but that's one of the first things that you'll do. So unfortunately, for those of you on the call, that means you get to go out in the cold weather because we're about to hit the cold weather for them. So unless you wait to join, but you don't want to do that.
Hey, Guy, by the way, we're a branch in Clarkson, Michigan, dude. So we're right down the street from you.
We're at Michigan?
In
Pontiac, right?
Yeah, pretty close to Pontiac.
I think you said Carson?
Telegraph?
Right off of M15, Dixie Highway.
Oh, okay. Yeah. M59. Yep. Some Wall Lake. I'm over by the lake.
Here.
Yeah, I'm Bloomfield Hills.
Michigan.
Yeah.
Mike, it's Ali.
Yeah.
I want to see if you have any kind of marketing assistance, and if you can cover that a little bit, that would be great, please.
Yeah, so marketing, let's talk about that just for a quick second. So marketing is one of those things we also call our non-negotiables. It kind of depends, though. It's a little bit, up to judgment. So when it comes to marketing, you got to realize the massive amount of marketing that we have available for us. Now, UWM specifically is the best at this, and you're going to realize when you join. But I want to remind you guys why brokers have more marketing than you guys do. But it's because we have access to so many different investors. Okay, so whether you're using the brand new UWM system that kicks every other system in the shins, or Calibers or Finance of America, there's so many different investors that they have retail. Now UWM has no retail, but they have this huge marketing team, and they put this massive amount of marketing out for us. And you're going to love this platform when you see it, and it's why we're going to send you to Michigan so you can actually go through the training on that marketing platform. But you have more flyers and videos and social media posts that you can shake a stick at, and they're all customizable to you. You can brand them to you. You can co-brand them with your realtors. There are just so many things available for you when you enter the broker world. You'll never be able to use it all. And then when you get to these non-QM lenders, they all have special flyers, special videos that you can brand to you. We even have, if Joey Q's on the call, we have our own in-house videographer, in fact.
Yes, sir.
He will help you out with there's Joey Q. So you just get your information to him on videos, and he'll work with you. He's available in our support center all day, and he'll get you custom videos cut up and help you out with your digital marketing and everything as well.
So we'll have his information. We'll have his information once we start.
Oh, yeah. Joey's inside of our support center all day long. We'll talk about that here shortly. We'll talk about support, the massive level of support we're going to give you guys. It's a real important conversation. But you're going to have all kinds of marketing support. You just log in and talk to us, and we're here to help you all day long. So Joey's in there all day long as well.
Just wondering, what are your processing underwriting fees if you charge extra?
Okay, well, let's talk about processing, right? So when it comes to the underwriting fee in our world is already built into the interest rate. So when we quote a rate, especially at the 275 level, the underwriting fee becomes zero. Doesn't mean there wasn't one. It means they cooked it into the rate, right? It's already built in. So you get a quote zero underwriting fee, and you have a better rate on your LE. Plus, your processing fee gets charged. It doesn't get charged in the origination section if you're in retail now. It gets charged in box B as a third-party fee. So you can still quote zero origination. So you're going to quote zero lender fees. The processing fee, though, depends on what you do. Now, let's talk about processing. So we have the best processing in the country, right? Now, that's a bold statement. but let me explain to you how it works. So one of my biggest pet peeves as a loan officer was processing. I was known as a mean loan officer to processors because they drove me insane. I don't think a loan officer should be chasing down conditions, and I think you have the right to not ever chase down a condition if you don't want to. And we said that was the first order of business when we opened up NEXA Mortgage to set up processing. But look at the screen here, this slide, and I think you can see why I can brag that our processing is the best in the country. First and foremost, the processors that we work with are commissioned only. They don't get a guarantee, a salary, a base pay, nothing. They don't get paid unless you get paid, right? So ask yourself, is your current processor being paid a salary, right? Are they checking out at 4:30 because their salary ends at 5? Are they available on the weekends? Are they available in the evenings? Are they available on holidays? Our processors have to use their cell phones, okay? So they don't get to hide behind an office phone. It's just like you and me, days, nights, weekends, and holidays, man. If I want a loan, I better be answering my phone. Now, those processors are commissioned only, keep in mind, okay? And you get to choose the processor on every single file. So if that processor shits the bed and they do a terrible job, you fire them. You're done with them. You don't ever have to use them again. You control your processing. Okay, and there's we use what's called contract processing. If you haven't heard of it, they're third-party contract processing companies. Now, the one we use the most, they probably do about 60% of our business, is a company called Secured Mortgage Processing. They have a very special relationship with us. In fact, they're actually in our support center all day as well. But we have a very special relationship with them because they assure us that they will make sure that their processors stick to these standards, right? And you get to choose your processor again on every single file. So think about that. If processor does a terrible job, they're commissioned only, they're not going to get files. They have to live up to your standards on every single loan. They can't take a break on this loan, right? And then you can reach, your processors are required to collect every single condition. So once you get a purchase contract, you should just turn that file over to the processor and move on. Now, you don't have to move on. You can stay as involved as you want. Me, I don't. I turn it over and I'm done with it, right? Processor takes care of all the disclosures. Processor takes care of the appraisal. Processor will handle the payment. They'll submit it to the lender for you. They'll do all this stuff for you. By the way, we'll talk about the lenders, right? In fact, let's talk about that real quick. One of the big problems with becoming a broker, by the way, is the same thing I bragged about earlier. I talked about the rates, right? One of the reasons our rates are so good is because we have so many investors and they all compete with each other, right? And we have low margins, of course. So our rates are automatically lower. Well, the fact that we have so many investors becomes a problem to you because all of a sudden now you got 60 rate sheets. You don't know what to do, right? Or worse than that, you have 60 lenders that you have to figure out how to submit a loan to. Right now, you have one lender, if you're retail, that you have to submit a loan to. But when you join NEXA, you got 60. Don't worry about it. The processors will take care of submitting the loans to them, though. We make them handle this stuff so that you don't have to have information overload. And it makes your transition a lot better the way we've set this up. So, but they have to collect every condition. They have to deal with every single person on the transaction. Buyer's agent, listing agent, transaction coordinators, escrow officers, insurance agents, underwriters. They deal with everything. I want you to go out and get more loans. Stop chasing conditions. You don't need a license to collect a pay stub, right? Use your license and go take more applications, pre-qualify more customers, quote more rates. So, and that's why processing is the third reason you will double your volume when you join NEXA Mortgage, because you don't have to sit there and chase all this stuff down. And think about this, guys. If your processor didn't do what they needed to on Friday by 5 o'clock, and your listing agent who's pissed off has their cell phone, who are they going to harass? I mean, they might harass you too, but they're certainly going to harass that processor, and I think rightfully so, right? Their text messages are going to blow up too, because you're going to give out your cell phone to your processor cell phone to everybody. You're not going to deal with it. Make them deal with it. Now, don't feel bad, by the way. These processors are six-figure earners. They make really good money. And they can choose how much they make because they're commissioned only. So they're skin in the game. We have the best processors in the business. We have processors that are making $250,000 plus a year. So and that's because they worked their tails off. So yeah.
Quick question. I got disconnected and had to log back into the call. And my question was in regards to breakage in the compensation plan. Like it pays 3 levels deep. So let's say one guy who I personally recruit, go somewhere else, what happens with 2 and 3?
So 2 and 3 stay your 2 and 3. That level 1, that first position though, does become a NEXA spot. It doesn't contract. I think they call that.
Yeah, dynamic compression. Okay, cool. So so 2 and 3 stay with me.
One person who left, NEXA. So, but now NEXA's in your downline, if you will, right? So, but those people stay with you. You don't lose them in your downline,
Gotcha.
Even though you don't know who they are, and you don't have to support these guys at all. You don't have to do anything with them. So. Again, if you recruit somebody and they're in your level 1 and then they leave, that becomes a NEXA spot. That's all that means. But you still get people below them that already came in, and you can still take advantage of them adding more people. So it doesn't contract though, right? So number 2 doesn't become your number 1, is the point.
And another quick question. Do you guys have, so like I'm a broker currently and just looking at the opportunity to move over. But I see that I know you guys have different comp levels with multiple different banks. So as a loan officer, am I able to choose a comp level with a bank, or am I'm just riding with the comp plan you guys have?
You choose a comp that you want to get paid on. Now, forgive me, guys. My Zoom's gonna.
All right, sounds like we lost Mike there, but just to answer that question, each of the individual lenders are going to be tied to their own comp plan with the company. But here's the thing, let's just say in your market, all of the loan officers that you have in your state, you guys can vote, you guys can choose which comp that you guys would want that to go into.
Hold on, can you hear me?
Yes, can hear you now.
Sorry, let me jump in. Let me jump in on that. We're not doing the voting thing anymore.
Not doing that anymore?
It became way too
Oh,
complicated.
man.
Dude, once we got 250 loan officers, it became way too complicated.
Yeah, yeah.
But as far as the, I don't know what happened. I think I'm at least talking right now, so I didn't completely.
So I can't earn one point at one bank and 2 at another, 275 at another.
No.
That way I can shop the deal.
No, what'll happen is you can use any investor, including one that NEXA is going to lose money on. As long as you stay profitable on other investors, then we're fine with it. You'll still be able to use those investors and get a different rate. But you'll still get your compensation. Does that make sense?
Let me make sure.
You just have to stay profitable.
Let me phrase it another way. So borrower A, I've got a lender paid comp plan, and I'm only making at NEXA as a company 1.25. Borrower B, 500 credit score FHA deal, I'm making 275. I can do that, correct? Yeah, you can use both investors. What has to be determined is what is your compensation, right? Now, at that level, you're not going to go 220 basis points because 220 is reserved for only 275 investors. That I understand. I'm just making sure that I can shop.
Yeah, let's just say, for example, you choose a comp plan of 200, but you do a lot of investors at 275 still, right? I keep track of the profitability of a loan officer. And then, I'll let you use that 125 lender and still pay you 200, even though I didn't even make 200, right? We just keep an eye on it. You know, we look at your profitability every quarter, right? And we make sure you're still profitable. And as long as you are, we continue on. If not, and all of a sudden we're losing money, we're going to say, hey, you were at 220. We're going to need you to drop you down to 200 for the next quarter. That's what we do. So we just drop you down to what's right, what's reasonable. So.
Gotcha. Okay. So I can't, basically as a broker now, I've got comp plan agreements with different lenders, and that's my comp plan agreement with that specific lender. I don't have the same one with everyone.
Are you the owner?
I'm an LO, but.
Well, okay, so you're a broker now, and if that's how they're paying you illegally, right? And I can't compete with illegal, and that's their choice to do so. It's an illegal comp plan. NEXA can't do that. Now, I'm not saying your broker is not going to get away with that for a long time, because most brokers are very small, okay? And the states are not regulating to LO comp right now. And that's just the truth in it. However, NEXA has a bigger problem in the states. NEXA is CFPB. I will become CFPB's poster child for brokers because of how big I've gotten. So, and that's where I have to be careful to not do that. So they're paying you illegally, and it's their choice to do so. And they'll probably get away with it for a while. But with NEXA's size, we have to stay responsible on it. So
Hey,
be
Mike,
careful because you're liable for it too. So
Hey, Mike, I think this
Yeah.
might be the question. Say, for instance, I get set up on the 275 plan. And then I get a deal where I need to get like real dirty down on the rate. Can I drop down to a 125 lender on a different deal and only get like the 88 basis points?
Right.
no, I'm still going to give you the 220. But somehow you better stay profitable for me. So if that happens, right? In other words, hey, you've done a lot of loans. I'm going to take a loss for you on this one. That's fine, right? That kind of stuff. So you still have access to them. I still have to pay you the same. That didn't used to be that way at NEXA, by the way, but that's changing to that way.
I get you.
Just so you know, a lot of my NEXA folks are on here probably scratching their heads. Going, what are you talking about? That's going to be the new compensation plan, right? It starts in January, by the way. So this because we had to work with attorneys and make sure we got right because we don't want to be the poster child for the industry.
Gotcha.
That makes sense? So, but you will get paid the same on every loan. So we have to keep an eye on it. You have to keep an eye on your profitability for me. And of course, I'm going to keep an eye on it. We have to review it every quarter. So.
Hey, Mike, a question came in regarding if they have their own processor, can they add their own processor to the contract processing company and pay her how they want, or do they need to add her on a team and 1099 her?
Secured mortgage processing will absolutely hire your processors for you. And then you don't even pay for them, which is awesome because you charge your processor. By the way, they charge $695 to the consumer, just as a heads up. But you charge the $695 to the consumer. They pay their processors 65% of that amount of money, right? Do the math. Doesn't take much to make substantial money as a processor. But then you don't have to worry about it, right? Your processor works for secured mortgage processing, but they still process your loan. So, but they will hire them for you, absolutely. So my screen's not up, and I apologize. I'm hesitant to share my presentation yet. Let's talk about support for a minute, because support is extremely important. This goes back to one of those things. If you join a broker, I got bad news for you. You can pretty much kiss support goodbye. I know a lot of you guys come from retail correspondent where they have somebody in your office. There's always somebody to help with this or that. You got different things that help. You can pretty much kiss that goodbye in the broker industry. And the reason is because the vast majority of brokers are very, very small. They can't handle support. They're less than 25 loan officers. The majority of loan brokerages are like 5, 6 people is the reality. And so they can't support. A broker owner has to produce to pay the bills, so they can't continue to support and do all that stuff and make money, right? So they don't have any support. So you're kind of on your own, or you're dependent on your AE, and I hope you get a good AE. There's some great AEs out in the world, but that AE is only going to help you with that company. So if you all of a sudden have a 510 credit score that you need help with, but you have a great AE at UWM, UWM doesn't do 510 credit score, right? So but at NEXA, we've changed the game on this, right? You're kind of in our support center right now. If you guys went back to that link that you guys received to join, you see the top link says concierge. As a loan officer, you can log in to our concierge department for anything that there is, right? And let's first talk about the LO support team that's in there. We have 4 licensed guys that are salary people from NEXA Mortgage that are in there all day long to help you with anything loan related. And when I say we're loan related, what I'm really talking about, especially your onboarding, right? So whether or not you want to just help get a loan into the system, they will hold your hand through it, right? And they will put the loan all the way through the system for you. They'll put it into the LOS. They'll get it submitted to a processor. They'll help you get it submitted. They'll do everything for you, and they'll share the screen like I was, so that you can actually watch it and you can learn from it, or you'll share your screen, right? Doesn't matter what your question is. They're in there to help you all day long. Plus, we have 5 lenders, and we're the only brokerage in the country, right, that actually has 5 lenders in our live video support center all day long to help you. It's like having your underwriter down the hall, right? UWM's not in it right now because they're actually sitting in my office watching, but they're in it all day long normally to help you. We actually have 4 reps at UWM. If you guys can't see that, you guys can see our UWM's here in our corporate office right now. So, but they're actually in here listening to the 𝗋𝗪𝗪 with us. They wanted to get a full scope of what we talk about. But anyway, they're in there all day long. So all you got to do is log in and say, hey, I want to talk to one of our UWM reps, right? And they'll put you into a one-on-one breakout room with them. And in there, you can go over anything you need. If you are needing to get an exception to a condition, if you're needing to price a loan, if you're needing to know how to submit a loan, you need guideline questions, you need them to review some income for you, help you out with that. They walk you through how to do these things. They're in there all day long. And again, guys, take advantage of this. We're the only lender in the country who has this. We're the only broker that has this capability. But we also have 𝗟𝗪𝗪 in there. We also have HomePoint in there. We also have Cardinal inside our support center. And then we also have Mortgage Solutions. And Mortgage Solutions is that sub 580 stuff that you'll do. So, but they're in there all day long waiting to help you out, as well as our NEXA licensed folks, the 4 guys that are licensed and paid for by us. They're in there all day long to help you out. So you never, ever, ever have to go another second without support when it comes to what you need, on loan level support. Doesn't matter what the question is. Don't look up a button. Just log in and ask us the question. And besides, it's a great way to have this interaction with us and talking to us constantly. And it's why we have such good morale within the organization, right? We're such good culture within the organization because we always get to talk to each other face to face. But it goes beyond just loan level support, by the way. The concierge team is in there to answer everything else for you as well. If you have a problem with your payroll, if your login's not working, if you need a new password, if you need to change your taxes, if you need your last year's W-2, it just doesn't matter. Whatever question you have, if you have marketing questions, if you need to talk to our licensing team to see about getting licensed in another state, our support team, every single person here at the corporate office is logged in on video all day long, waiting to help you out with any question you have. You're never going to go without support. In fact, we're open every business hour across the country, right? So if you're on the East Coast, we open at 9 a.m. your time, and we stay open until 7 p.m. your time. If you're on the West Coast, we open at 7 a.m. your time, and we stay open until 5 p.m. your time. So, and once we open up Hawaii, that's going to get even longer, right? So that's just more support hours, because we promise to stay open all business hours of any one of our loan officers. So they're on there all day long. In fact, myself and Matt Grella, the 2 owners of the company, we're in here all day long. You just log in and say, I'm pissed off, I want to talk to Mike. No problem. They're going to put you right in my office. We're going to have a face-to-face conversation and get this stuff fixed for you, okay? So beyond that, we also, inside of our support center, we have NEXA University. NEXA University, we have multiple classes every single week throughout the week that talk about different subjects, whether it's about how to get a file submitted to S&P, whether it's lender products, whether it's a specific product, whether it's a marketing program, whether it's MBS Highway. Our friends over at Listing Booster, they have a class to do every Friday for us. DJ does some stuff on here for us a lot. There's just so many different classes that you'll have available throughout the week that you can attend those live. But we also record every one of those, and then we put them into our NEXA University library. So the moment you start, you're going to get a login to the NEXA University with this video library of all these different trainings that we've done over the last 2 years, and you'll be able to access those and watch those. You just type in your keywords, and you'll get a bunch of different topics that you can listen to and watch on, almost no matter what it is, right? You can request topics, and then we'll schedule those things up for you. And then I like to point out our NEXA town hall meetings. I don't have my slide up here, so my NEXA folks, if I'm missing anything, remind me. We do these NEXA town hall meetings every single Tuesday at 9 a.m. Arizona time. And right now, Arizona time is Mountain Standard Time. It does switch for us because we don't recognize daylight savings in Arizona. But every single Tuesday at 9 a.m., the entire organization logs in. And we have generally roughly 200 to 250 people on that call every single Tuesday. And they're all employees of the company. And that's where we go over all the other. We do it every single week. And that's where we go over updates. What's going on with new licenses? What's going on with this lender? What's going on with, how far is payroll out? What's upcoming events? The important part to the town hall meeting, though, is that it's an open mic. Every single loan officer in the company has the opportunity to undo their mic, unmute themselves, and talk and tell us what's going wrong. Okay? And that's where I tell you guys that if anything that I've told you here today does not come true for you, and you log into that town hall meeting and you call me out in front of the entire organization, okay? We are held accountable here. We do what we say we do, and you get what we promised you, right? But that town hall meeting is where you come and you tell me what's not working so that we can fix it. And we do it every single week for a reason, because we want to make sure we fix it immediately. We don't want this to go on to another week. Most of the time when you bring up a problem, we literally fix it right on that call, or I follow up and get it fixed, right? This week, the biggest thing is payroll's taking 48 to 72 hours, and we want it within 24. So now we're working very hard to get them caught up on the payroll side of things. And that's okay, you know, things don't go perfect every time, but we fix them and we're accountable is really what I want to emphasize to you. And that's the level of support we have. Every single one of you will have my cell phone and Matt's cell phone when you come onto this organization. I don't care how big we are. Every single employee, LOA, receptionist at your office, your team will have my cell phone. That way, if you have a problem and our support's on, you can text me. I get texts all night and all weekend long, and it's okay. So it's what I do. I actually really enjoy it. So, any questions though on support?
I have a question in regards to licensing. So, say I'm licensed in only one state, but I have relationships with people, realtors in different states, but I'm not licensed in that state. Do you have the opportunity for internal referrals that way and us getting paid a portion of it, or how does that work?
Did somebody set you up to ask this? That's a good question. I'm glad you brought that up. Absolutely, we do. Our LO support team, the same people are going to help you do all your onboarding. They have all the different licenses, right? And Matt, really my partner, he has all the different licenses. So when that happens, you're just referring the loan to us. We'll do the loan for you, and you're going to get 25% of the revenue for any state that you're not licensed in. So, and when you're onboarding, right, we're actually going to take on all those loans on for you while your license is transitioning to make sure everything runs really smooth for you in your transition as well. Same process.
Yes, Mike, and that's perfect timing. I was just asked that, and so for anybody who's going to be onboarding, moving on over to NEXA, you know, that rough month where you're sitting at your current place, you're not pulling credits, you're not doing anything, guys, that's a waste. You do not have to do that. No lag time, none of that. Start onloading your deals over to our LO support right away. You're going to get paid on that when you get in. Now, they're going to be the originators on file. They're going to be the main point of contact. They're going to handle everything, but you get paid. You get paid 75% of the commission. LO support's only going to be taking 25% of the commission for their time in onboarding that deal and originating that deal for you.
That's for the
the referral fee goes backwards in that case, right? If they have to take all your loans on board because you're not transitioning your license right away, stuff like that, they can do that, but they're going to get 25% of it. So. And the flip side, once you're on board, if you don't have the loan in that state, you don't have that license, then you get the 25% referral fee. So.
Okay, so 25%
they're there for you.
The referral, and then 75% onboarding transition.
Correct.
Okay.
So that's kind of the end of the majority of my presentation. Any open-ended questions that I can answer for you guys?
My licensing question. If I'm licensed under DRE in California, do I need to get a DBO license?
You do for NEXA, yeah. We don't do the DRE. We do not do 1099. Every employee is W-2. So, but we do have the DBO license. We don't do the DRE.
Okay.
In California. Specific. Right. That's a specific California thing.
Right.
But there is, by the way, transitional licensing. I believe transitional licensing will allow the DBO for the first 120 days. So you have 120 days under the new transitional licensing rules. So
it works the same 75-25. Is that what you're saying, or will I get the full?
No. The new transition license rule that just took effect November 24th, right, says that you can get a transitional license for 120 days while you're pursuing it, as long as you have industry experience. So you should, I want to confirm that from DRE to DBO. DBO in California allows it. The DRE license doesn't, but the DBO does. So if you already have a DRE and you do not have a DBO, you can still join NEXA immediately. You can still get a transitional license immediately. You can still close loans yourself immediately. You just have 120 days in order to get your DBO now. So.
Can you guys hear me now?
And if you're at, yeah, we can hear you, Lisa.
Okay, good. I was on my phone and I've been yelling at the screen. I had to go in and find out. I had a question because we were on the subject of the licensing. So my license expired here, but I have some deals and I'm about to take the test. Will I be able to still come aboard and service those loans? And how would that work? How would that work?
So your license expired. I got to assume you haven't been licensed in 2019 then, right?
No, I haven't.
So I do not think you would qualify for the transitional license.
Okay.
I could be wrong, but I do not think you will qualify for the new transitional license. So you would have to get your license in order for us to be able to pay you on loans.
Okay, so do you have a way that I can refer the loans while I'm working on that this month? Because I have a couple of deals that I'm trying to get.
I can't pay you on a loan that you're not licensed to originate, unfortunately. I really wish I could. I just can't. I got to protect the company there. But we can help you with the licensing. Our friends over at UWM actually have a licensing team over there as well that can help you out with that as well. Sounds like you kind of already know what you need to do, but I cannot pay you for any origination if you were not licensed at that time.
Okay, because I plan to take it within the next week or two. So if I can get some support in helping me study, because I've already taken it, I didn't pass. So if I can get that support information.
What you could do is you could join as an LOA to somebody. They originate the loan, but you're gonna have to pay them, of course. They're gonna want, they're doing work on the loan. You could come on as an LOA to somebody, right? They originate the loan, they do that, and you get paid as an LOA. That is something that we could talk about after the call as well.
Okay, that'll be perfect. I would like to talk about that.
Yeah, so just reach out to me. Somebody throw my cell phone in the chat line. My computer's all messed up, so I don't want to mess with it. But throw my cell phone in the chat line so that everybody has it. Please reach out to me. We can talk about that.
Is that the 480-228-5442 number?
That's it. That's my cell phone.
Okay, it's appearing here. So I'll call you once we get 480-228.
Just be patient with me today. Today is my absolute busiest day of any given week, and today's even crazier with a lot of people coming in from out of town, and I had a little family emergency that I have to deal with as well. So it's going to take some time.
Maybe tomorrow.
Be patient with me, but I will call you back. Well, you can do today. Call me. If I don't answer, just send me a text, right? I will call you back. So.
Okay, great. Thank you.
Texting is the best way to leave me a message if I'm not available right away.
And Teresa, by the way, Teresa, feel free to reach out to whoever invited you over here to the NEXA meeting, or jump on to nexamortgage.com and you can access the LO agreement from right there and just mention whoever invited you on in here. But very easy stuff.
Okay, I'll do that too. Thank you.
Hey, Mike, I was reading one of the guidelines for the transition, if you are registered at a bank, that you need to have been registered for the last 12 months to qualify for the transitional period.
Right, and I believe within the last 30 days too. So there's some sort of a 30-day rule there too, but that's correct. Yes, you had to be registered for 12 months. You have to have enough industry experience to qualify for the transitional license. And guys, I promise you I was going to quote rates again, and I really do apologize, but my computer acting up the way it is, I don't think it's going to be a great idea. So one of our NEXA folks, do me a favor, put into the chat log, nexarates.com. That is a backlink to our website that will actually get you active rates that you can quote them on yourself. It's only going to show the 275 lenders. It's not going to show the borrower paid options that we talked about. It'll show just the maximum investors on there, but it has the compensation that we pay as well as a live rate sheet that's attached to 𝗟𝗡𝗪. And it works best on computer, by the way. I'll just tell you that. It's an 𝗟𝗡𝗪 product, and it's a little bit sketchy on mobile. but there you can run rates for yourself and compare what you're currently paying. So. What else, guys? What other questions you got?
And another question regarding bringing their own processor on and working for SMP. They want to know what % do they make of the fee, and are they able to decide on what they charge the fee if it's their own processor?
No, SMP does have to follow standards as far as what they charge, right? That's guidelines, federal guidelines there. But they charge $695 normally. They charge an extra $100 if it's a non-QM deal on top of that. They charge an extra $100 if it's a DPA deal, right? Now, then they have rush fees as well. So if you have a rush fee that needs to close inside of 2 weeks, there's an extra $200 on that because it can be stressful. And if you have a rush fee that's within 3 weeks, then it's an extra $100 only. But then the processors get 65% of that money at secured mortgage processing is what they get of that. So but they are introducing a discounted fee for VA IRRRLs and FHA streamlines. They're going to be introducing one of those. So they're all coming into town tomorrow as well. And we're going to sit down with them and discuss a discounted rate for NEXA when it comes to those types of deals.
Thank you.
Yep. Also, I do want to point out turn times, right? But since I mentioned the rush fee, you guys are going to love brokering. This notion that you lose control when you're a broker is silly, and it's just simply not true at all. In fact, UWM is our go-to lender for turn times, right? What's your guys' average turn time? 14 days, clear to close? Is it still 14 days in the clear to close? Okay, so UWM in general is an average 14-day clear to close when you submit a file. We had a file a couple of Saturdays ago. I think it was one of our NEXA folks, right? It was like 2-hour clear to close on a Saturday. I had a 58-minute clear to close on a file a couple weeks. I saw one come through a couple weeks ago. When you need to close a file quick, right? Generally, you're going through UWM. If it's a good, clean file, you'll get those really, really crazy fast clear to closes. So, but you're going to enjoy the brokering environment because you have options of who to choose. So, what else, guys? Anything else? Oh, benefits. Gosh, I never talked about benefits. My NEXA people, how do you not let me talk about benefits? It's one of the best things about NEXA.
Right?
Gosh.
Completely forgot about it.
We blew that one over. It's because I don't have my screen up, right? My slide. Guys, we got to talk about benefits. This is another problem with brokers. And I hate to tell you this, guys. If you join a brokerage, say goodbye to your benefits. If you have really good benefits where you're at, kiss them goodbye. You get no more solid benefit plans unless you join NEXA, okay? NEXA is the only broker in the country that I'm aware of that actually has Fortune 500 level benefits now. And by the way, even we just got them. The reason we're one of the largest broker in the country, C2 Financial, great company, great organization, they do not provide benefits, okay? They're not interested in providing benefits because the costs that go into them, it's very cost prohibitive, right? And we make very, very slim margins on this. But we know it's very important to my family to have benefits, so I know it's going to be important to yours. And these aren't cheesy benefits like Marketplace. Most mortgage brokers have these kind of cheesy group plans that that can be extremely expensive if you're anywhere in your 50s, specifically, right? But we don't have that issue. We have really solid support, and we're actually excited about it because it rolls out on January 1. So we're actually just got these new, and the reason we're able to do this and other brokers can is because of our size. Again, you got to understand how few brokers in this country have even 50 employees, and 50 is when you finally actually have to provide benefits. So the benefit packages are pathetic even at 50, right? And then there's another increase at 100, but because we have over 360, 370 employees, right? We actually have access to these Fortune 500 level benefits. So, and we have all of it, okay? We have the 5 different medical plans to choose from low cost, high deductible plans to they cover everything if you're not healthy type plans, right? We have the life insurance. In fact, you get life insurance and long-term disability automatically, We have short-term disability. We have add-ons to the life insurance if you want to do that. We have the HSA savings accounts, 401k. We actually have matching 401k now. Now, we don't have the details on the matching piece yet because we're rolling that out in the first quarter. But we will be matching your 401k. It's likely going to be 3%, 3% match. But brokers and mortgage companies don't generally match on 401k, especially brokers because their margins are so slim. But we're going to be actually matching as well. So we're really excited about all the benefits that we have available to you guys. You get the dental, the vision, everything. So I don't know how we forgot about benefits. It's a huge benefit to NEXA. If you join a broker, you usually kiss the nose goodbye. So
in regards to disclosure.
Any other questions, guys?
Yes. So in regards to our disclosure.
Go ahead, Lindsay. Yeah.
And preliminary titles and everything like that, the processor handles it?
Processor handles everything, right? Now you're in control of your processing. So if you choose a processor that doesn't handle that, that was your choice to choose them. But if they're a processor that we recommend, they handle that. They handle everything. We call it endorsed, right? We endorse the processor, not necessarily the company. So there are some processors at some companies that will endorse and we won't endorse others. But they have to live up to those standards that we indicated on the previous slide. And you're going to know who these processors are. The moment you start, you get access to our NEXA University, and there's a spreadsheet in there that has all the different processors that are endorsed and unendorsed, by the way. And you can choose which processor you use. So you get the right to choose that. You can choose any processor you want. You can bring your own, all that fun stuff. So, okay. But yes, the endorsed processors are required to handle everything. It's literally, when you get a purchase contract or ready to go refinance, you submit it to them, and you just keep bugging them, asking when you get paid. So that's how it should be. That's how it's designed. Is it perfect? No. It doesn't happen that way every time. Do I get complaints about processors? Absolutely. And we address those complaints as we get them. So and if they're just not doing a good job for you, you fire.
Collect documents and submit the file.
Say that one more time.
Get the qualify, collect the get the contract and collect the documents, submit.
Yes, ma'am. We call it collecting the twos, right? 2 pay stubs, 2 W-2s, 2 tax returns. Collect the twos, 2 bank payments. Get the twos. Make sure the file can actually close. You got to understand something. If you constantly submit files to a processor that never close, that processor does have the right to refuse your files because they're commissioned only. And if you're constantly making them work and they never get paid because they don't get paid unless the file closes, right? They can reject your file. And loan officers who submit really good files will appreciate that because your files don't get slowed down by others that do. So,
do you have a connection with HBM as well as Total Expert?
HBN, like Home Buyers Network?
Yeah, it's a marketing outfit that really gives a customer access to them multiple listing services. I'm in California.
We don't have a corporate account of it. I'm familiar with it. If we had enough loan officers who wanted to jump in, and remember, everything goes back to your P&L, right? So any cost of it would go back to the LO. But if there was enough loan officers who wanted to be a piece of that kind of stuff, we would set up a corporate account so that you guys can all get discounts on it. Absolutely. We do that for quite a few different things. Listing Booster, NBS Highway. DJ's got some products that are really solid that he takes care of the NEXA folks on. Renato has MLO box. You have access to a lot of things. But again, we'll set up more. We just need to know that we have enough loan officers that want to jump into it. What usually happens in that scenario is that our LO support team will schedule a NEXA University. That company can come in and do a full demo on it. And then all the loan officers will be invited to it. And then if you have enough, then we'll go out and negotiate the discounts for you if we have enough people who are committing to signing on for it.
Gotcha.
So you can use the power of NEXA to your advantage on any of that stuff. And we do it all the time, like our credit reports, right? Our credit reports are cheaper than even what a lot of mortgage bankers get them at, because we will literally give you a copy of our entire credit report invoice and let you go negotiate it cheaper for us. We're truly transparent. We don't hide our cost at all because we want you to know that you're not getting a nickel and dime P&L, I call it, right? I'm charging you, $35 for a credit report, but I'm really only paying 25, right? A lot of companies do that. We don't do that. We're fully transparent.
So, going back to the compensation, did I hear you say that you issue a W-2? Is that what I hear you say?
Yes, sir. Everything is W-2 here.
Okay.
And that's big on the top side of regulators right now, especially for mortgage brokers. There's a lot of mortgage brokers who are out there paying 1099, and they're getting ready to go after them. So we never have, so we're clean. But there are a lot of brokers out there that do that, and a lot of them are in California. And California the California Supreme Court just passed a ruling that starting January 1st, that's no longer allowed. It's part of the Uber laws, Uber rule in California, but it's a big problem in the mortgage broker industry. It's almost topic number one these days. So, but that's why we give you the credit cards, by the way, so you still get the same benefits.
Mike, I'm on NEXAMortgage.com. Where do I go on your site to get more information?
So
NEXA
on the
Career?
top, you should see NEXA Careers. That drop-down list is all designed to.
So all the info is right here.
I mean, a lot of it. I mean, we do this every single week. That way you could always come and ask more detailed questions, but that's kind of an overview of a lot of things. We don't record these calls, but you can go on there and get more information. If you dig in there, you can see that the link on the wholesale rates link. That's that nexarates.com I told you about. And you can run our rates on a wholesale side. That's not for consumers. It doesn't quote APRs and all that stuff. But
no, that's fine. Do you have list of your lenders on that, or?
So once you get logged in, once you get employed with NEXA, you're going to have access to the full NEXA University, and on there you have lists of all the lenders, the contact information, and all that stuff. The majority of loan officers, though, again, you just log into our support center and talk to the lenders we have on there, because those are the lenders that we have service level commitments from, right? Pricing level commitments that other brokers don't have access to, things like that. So those are the lenders you will probably look to first, and and they're in there to help you all day too. It makes it really easy to work with them. They've actually committed to us to do that. So, and they stepped outside of the box. I can't thank those lenders enough for doing it. I mean, let me talk about UWM again for a minute, right? This is really outside their wheelhouse. When we first asked UWM to do this, they kind of scratched their head because it completely goes against what they do. So, and these guys may shake their head at me a little bit as I say this, but UWM has this system that's really awesome. 𝗟𝗪𝗪𝗧, who is the president of UWM, has this system. I believe it's built out of Salesforce, is my guess. And it's an awesome system, and it tracks everything they do. But when we asked them to commit to log into our system, 𝗟𝗪𝗪𝗧, the president of UWM, had to give up a little bit of control because they can't track what they do in our system. Right? They had to trust that it was going to bring them business and do a good job. And our business has grown huge in the last 5 months, four months that we've been doing this. So we really appreciate them coming to play for us. But yeah, you'll have access to all the different lenders. So I do see a question there from Norma. Is there a 10% payroll charge? There is a payroll charge for the employer matching taxes, right? State, federal, FICA, workers' compensation. Some of them are 10%, some of them are more than 10%. It depends on the state that you're in. Some states don't have state matching taxes. Some states have higher workman's comp. It usually starts out around 12%, by the way, at the beginning of your employment. Once you make $126,000 a year, though, it drops down to like 3.8%. That's all it is. We don't continue to charge you the 12% that a lot of companies will just continue to charge you at that high rate. We give you the actual cost, because once you make that much money, a lot of the charges drop way, way, way down. And so usually it's about 3.8% after you make $126,000 a year. So at the beginning of the year in January, all the loan officers are experiencing higher employment matching portions, right? That's just the way it's going to work, because when they reset. But once they hit that 126 mark for the rest of the year, they really get to enjoy the lower levels. So NEXA is not entry level friendly. I apologize. So if you're a brand new loan officer, you can still join NEXA, but you have to find a mentor within NEXA that's going to mentor you, be there to answer all those questions, things like that, because we don't have the ability to teach a loan officer what DTI is, right? Or all the different guidelines. You're expected to already have knowledge when you come to NEXA Mortgage. Now, if you are a newer loan officer and you do get a mentor, they're going to want a little piece of your pie. Don't get me wrong, but it's a great way to get into it. And so just you'll need to find someone. Reach out to me. I'll help you find a mentor in your area. And you'll also want to take advantage of going up to Michigan to UWM on a 4-day trip. There's a 4-day trip that they do for newer loan officers that you guys will take, that you newer folks will take advantage of. But you do need a mentor. Somebody who's going to be there to answer more detailed questions than what our LO support team is equipped to answer.
What was that 4-day trip?
What else, guys? The 4-day trip to up to Michigan and UWM is for newer loan officers, right? Loan officers, like more recently licensed loan officers. Otherwise, everybody goes up for a 2-day trip. And you're already experienced loan officer, so you don't need new LO training, right? And that's to acclimate you into the wholesale world. That's to acclimate you with all the marketing tools that they provide you, get you into their systems. It's a really exceptional thing. You guys really will be excited when you come out of that UW event with all that they do for you. So,
is it at a certain time or you can go anytime? How does that work?
So we send 25 loan officers per month.
Per month,
right?
Okay.
And that's because, yeah, per month. So you'll go up
For
there
2
with the
days.
next group. So it's fun. Yeah, it's a 2-day event. Either Matt or myself are trying to go to every single one of them. That way we can be there because we get to meet you here, but we also want to take the opportunity to meet everybody and shake your hand a little bit, right? But it's fun because a bunch of NEXA folks around the country come out, and you get to talk, it's a NEXA class. It's specifically for NEXA at that point. So it's something they only do for their large brokers. They send people out for all their brokers, don't get me wrong, but not that type of group. Usually you get, what did we used to get before we were, like 8 a quarter or something like that? 6 per quarter. Now we go 25 a month. Right. Yeah. That just shows you, the size that NEXA is getting to. So, which don't think that means less support. So, I have a couple licenses there on NEXA. I'm willing to work hard, but I want to make sure there's some sort of mentor available or will be available. So, when it comes to that mentoring, right? If you're a brand new LO, I can get you in touch with a mentor, somebody that can help you out. There's quite a few good folks, even folks that are on this call. But if it's support, you don't need them. If you're already an experienced LO, you just support. You just log into our support center and you ask any question. Our LO support team, as well as our lender partners, are in there all day long to help you out with loan scenarios and all that good stuff, what to do. So you're not, information overload when you join as a broker. And then they're there for you all the time, by the way, right? Not just now, but months from now, a year from now. So you'll use them all the time. When you first join NEXA, you're going to log in like 3 times a day. So, and you need to, right? Use us, lean on us. We're there for you. We don't want you to ever have to look up a button. So, but if you need deeper, if you're not an experienced loan officer, again, you will need a mentor. So we can get you in touch with somebody that can help you with that. As far as licensing, normally, yes, we will get licensed in Arkansas. We're going to get licensed across the entire country. In fact, our goal is by January 2nd to have our licenses submitted for the rest of the country, all the way across. And you can go to nexamortgage.com, and in the top, you'll see a locations button. You'll see where we're currently licensed. But our licensing team here is currently working on submitting licenses for the rest of the country. We want to be licensed across the entire country, the vast majority of the country, before the end of the first quarter of 2020. Some states take a little bit longer, right? So with the exception of New York, we should have the entire country by second quarter. New York takes longer. If you're from New York or you were born in New York, you're crazy. Your licensing process is insane. So, What else, guys? What other questions you got? No, there are no upfront fees to start whatsoever. You will never write a check to NEXA Mortgage. I'm still blown away that companies do that. It's illegal. You're a WC employee. You can't write us a check, right? We front all the costs for that, and it just finds its way to your P&L. So I know there's other brokerages that will make you pay for your own, put your credit card up for things, your credit reports. That part is legal. There's nothing illegal about that. But there's other brokers that make you get your own LOS, right? Things of that nature. We don't do that. We front all the costs for you. We make it easy for you to transition. So we are not currently doing joint ventures with realtor teams, but if those realtors would like to become licensed, then they could then they can do something. Realtors have to become licensed though to do that. Joint ventures have to be completely new companies. They have to have separate licenses entirely. So we can't use a transitional licensing for a state that NEXA is not licensed in, by the way, Norma. I just saw the second part of your question there. That's only if we're already licensed in there, but you can use the transitional licenses for states that we are licensed in. As far as what piece of the pie do mentors take, that's between you and the mentor, right? Me, I wouldn't mentor anybody for, mentoring is tough, but I'd want at least 25% of it personally. And I'd want it on a minimum of like 10 files. So we use 𝗂𝗪𝑥 for an LOS. Although we are transitioning to a new system called Arrive, our friends at AIM, the Association of Independent Mortgage Experts, they have a new system called Arrive that we do want to transition to it, but it'll probably take us 2020 to get to it. But otherwise we use 𝗂𝗪𝑥. Very easy to system, and our LO support team is there to help you with it if you're not familiar with it. But it's really easy. Actually, unfortunately, it's one of the simplest systems out there. It hasn't changed in 20 years if you're used to use it.
So as far as communicating with the borrower and the process of where they are in the milestones, do we have any technology behind that that gets automatically sent out, or how does that work?
Yeah, so that depends on which processing company you use. If you're using secured mortgage processing as an example, they use 𝗶𝘁, right? And 𝗶𝘁 has a bunch of updates, online, automation, text messages, messages that go out constantly. So that everybody knows what's going on with it. And of course, don't forget the processors are available on cell phones, so you can text them. Anybody can text them, reach out to them as well. But they use a system called 𝗶𝘁, and different processors use different systems. 𝗏𝘓 is a great processing organization out of Florida. They have their own technology that's really cool that you can log in at any time and see what's going on as well.
So 𝗶𝘁 is what the processors that you guys use and that you recommend us use to update all the content.
Yeah, some of them. Don't get me wrong, we like 𝗏𝘓 too. But secured mortgage processing is where a lot of our loans get done through, and they use 𝗶𝘁.
Okay.
You get all your updates on there.
But bottom
and they
line,
have over 50 processors, so.
Okay.
And then somebody asked about branching. Yes, you can set up a branch. You can hire LOs. They do not have to get paid the $220. You get paid on something south of what you're making. Very common, especially if you're providing leads and mentoring or office space, stuff like that. You can actually absolutely do that. And by the way, if you open a branch and get a brick and mortar location, you're actually helping me tremendously by doing it. It does hit your P&L, but I'm then going to step in with my team here and help you recruit. And I'm going to send loan officers to you through the revenue share plan. Enough loan officers that my goal is to offset the cost of your rent. So through revenue share though. So you'll be able to take advantage of that. Juan, I can't pull rates right now with my computer acting the way it is. You can log into our LO support team though, on the concierge team, and ask them to pull rates for you. But there's something in the setting that you're missing a button maybe. I've had people say that to me before on the FHA rates, and they ran it again and then it pulled. But scroll down a little bit further on that nexarates.com to see more than FHA. You know what? I'm glad you brought that up, BJ. Yes, there is a minimum. There's 3 requirements to be at NEXA Mortgage, by the way. 3 basic requirements, okay? Number 1 is you have to close 2 loans a month, okay? Really what that means is if you're not covering minimum wage, we got an issue. And it really is 1 loan a month, but we want you to be closing 2 loans a month. And if you're not there, we're not going to cut you right away, right? We're reasonable to it. We give you time to get up to that. But we really want you pushing 2 loans a month. through the system. If you're not doing that, we don't terminate you. You know, we have some loan officers that come on and say, yeah, I'm full-time, and they're really not full-time. They don't do anything. They haven't pulled a credit report in 45 days. They get a no activity clause, right? So we put them on a no activity, we remove access, and then those loan officers can still refer loans to our LO support team, and they'll just get 25% of it at that point. So we only hire full-time loan officers is the theme there. Okay, so you got to be full-time only. We're not looking for part-time loan officers here. Number two is you got to be compliant, right? I can't have fraud. I can't have fraud in your history. So if you have an action from a regulator on your NMLS, we will see it when you come on. Matt and I directly will be the ones reviewing those. If it's fraud related, you're probably going to get rejected. We can't take the chance with our investors. We missed a couple in the past, and it was a questionable thing, and so we won't take the chance with our investors. We got to do right by them as well. And then third is character, right? Character comes down to, guys, don't be a jerk. You know, treat me the way you want me to treat you. In fact, forget me. You can cuss me out, whatever. I got thick skin. Treat our team the way that you want them to treat you. You know what I mean? If somebody made a mistake, they're not idiots. They're not, you know, an explicitive name. They made a mistake. You know, it's going to happen. Character issue is real important. We have an outstanding culture, and we want to maintain that. It's pretty rare that we've only let go of 3 people in our 2 years. Each and every time we've done it, I shouldn't say that, 4 times we found fraud in somebody's background. But on the 3 that we had to let go, it was always character, right? You can't, and we have no problem with, you know, an F-bomb here and there. It's going to happen. That's passion, right? But when it's constant, and it's like you're constantly berating people, and it's like you're constantly difficult to work with, there's going to be a time where we say, look, it's not a good fit. So 3 rules, right? You got to be full-time loan officer producing loans. You got to be compliant, and you got to be cooperative. That's what it really comes down to. But you know what? We're actually blessed because 99.9% of our folks really are awesome to work with. The fact that we are always online available to help you on video like this constantly really helps out with our culture. The fact that we meet every single Tuesday to take care of problems really helps out with all that stuff. So, and by the way, you guys can log in and hang out with each other. We have an LO lounge in our support room too. So,
do you have a NEXA Christmas party?
We have a what? NEXA
Mortgage holiday party?
Actually, it's this Saturday. It's probably got a lot of people coming to town right now.
Okay.
So if you're local, let me know. If you're in Chandler, Arizona.